Is the stock market about to crash? Are we heading toward a financial disaster? With prices going up, interest rates rising, and the world economy facing uncertainty, many experts believe a big crash could be coming soon. But what does this mean for you? Will your investments lose value? Should you sell everything now, or is this actually a chance to grow your money? In today's video, we'll break it all down: why a crash might happen, how it could affect you, and most importantly, what smart moves you should make right now to protect and even grow your wealth. So, are you ready to take control of your financial future? Stay with us till the end, and don't forget to hit that like button and subscribe for more important updates. The warning signs of a market crash. Number 1. Rising inflation. One major warning sign of a market crash is rising inflation. When prices go up, people can buy less and businesses make less money. This leads to lower sales, smaller profits, and struggling companies. As a result, stock prices can drop fast. Higher inflation also forces central banks to raise interest rates, making borrowing more expensive. This slows down the economy even more. If inflation keeps rising, it can push the market into a serious downturn, hurting investors and businesses alike. Number 2. Interest rate hikes. Central banks, like the Federal Reserve, fight inflation by raising interest rates. This helps slow down rising prices, but it also makes borrowing more costly. Businesses take fewer loans, cutting back on investments, and people spend less because credit cards and loans get expensive. As a result, companies struggle to grow and stock prices drop. Investors often sell their stocks to avoid risks, leading to a market downturn. If rates stay high for too long, the economy could slow down even more. Number 3. Market overvaluation. Right now, many stocks are priced way too high. Companies have high price-to-earnings (PE) ratios, which means their stock prices don't match their actual profits. In the past, when stocks were overvalued like this, the market eventually dropped. When investors realize prices are too high, they panic and start selling. This leads to a chain reaction where more people sell, pushing stock prices down even further. If this continues, it could trigger a major market crash. Number 4. Geopolitical tensions. Wars, political troubles, and trade fights can make investors nervous. When people worry about the economy, they start selling their stocks, causing prices to drop. Right now, big issues like tensions between the US and China or conflicts in Eastern Europe are making things worse. Uncertainty in the world often leads to a weaker stock market because businesses and investors don't know what will happen next. If these problems continue, they could push stocks even lower. Number 5. The debt bubble. Right now, families, businesses, and even governments have more debt than ever before. When debt gets too high, people and companies may struggle to pay it back. If a big company or bank fails because of too much debt, it can cause panic in the stock market. Investors may rush to sell, leading to a market crash. High debt levels make the economy weaker, and if things go wrong, it can trigger a financial crisis that affects everyone. Number 6. Mass layoffs and recession fears. When companies start laying off workers, it's a warning sign that the economy is slowing down. If too many people lose their jobs, they will spend less money on goods and services. This hurts businesses, causing their profits to fall. When investors see lower earnings, they panic and start selling stocks. This can lead to a big drop in the market. High unemployment can create a chain reaction that weakens the economy and increases the risk of a market crash. How a stock market crash affects you. A stock market crash doesn't just affect big investors, it impacts everyday people too. If you have a retirement account like a 401k or other investments, a crash can shrink your savings. Businesses also suffer, leading to job losses and making it harder to find work. Real estate values can drop, reducing the worth of homes and making it difficult to sell property. Banks may raise interest rates, making mortgages, car loans, and personal loans more expensive. When people feel uncertain about their finances, they spend less, causing the economy to slow down even more. This cycle can make recovery take longer. That's why it's important to stay prepared and have a plan in case the market crashes. Taking smart steps now can help protect your money, job, and financial future. Understanding these risks helps you stay ahead and make informed decisions during uncertain times. What you should do now to protect your money. 1. Diversify your investments. Putting all your money in one place is risky. If one investment fails, you could lose a lot. That's why it's smart to spread your money across different types of investments like stocks, bonds, real estate, and even gold or silver. This way, if one market crashes, others might still be strong. Diversification helps protect your wealth and lowers the risk of big losses. It's one of the best ways to stay safe during uncertain times in the stock market. 2. Hold more cash. Having cash ready during a market crash is very important. It allows you to buy stocks and other assets at lower prices when the market drops. Plus, if you lose your job or face sudden expenses, cash can help you stay financially secure. Without savings, you might struggle to pay bills or cover daily needs. Keeping some money in cash or a safe account gives you peace of mind and the chance to take advantage of good investment opportunities. 3. Invest in defensive stocks. Some industries stay strong even when the economy struggles. Investing in consumer staples like food, healthcare, and utilities is smart because people always need them. Dividend-paying stocks can also be a good choice since they provide steady income even in tough times. Precious metals like gold and silver often go up in value when the market is uncertain. By focusing on these investments, you can protect your money and even grow your wealth during a market downturn. 4. Reduce debt. High-interest debt, like credit cards and personal loans, can be a big problem if the economy crashes. The more debt you have, the harder it becomes to manage expenses during tough times. Paying off debt now can free up cash and reduce financial stress. Without high monthly payments, you'll have more flexibility and security if things go wrong. Focus on clearing your debts so you can be in a stronger position no matter what happens in the economy. 5. Increase your emergency fund. Experts say it's smart to have 6 to 12 months' worth of expenses saved in an emergency fund. This money can help you pay for rent, food, and other essentials if you lose your job or face an unexpected bill. Without savings, a financial crisis can be much harder to handle. Having a safety net gives you peace of mind and keeps you from relying on credit cards or loans during tough times. Start saving now to protect yourself from future uncertainty. 6. Stay invested but be cautious. Trying to predict when the market will crash is nearly impossible. Selling everything and waiting for a downturn might seem like a good idea, but you could miss out on growth. Instead, focus on investing in strong companies with solid financials that can survive tough times. Businesses that provide essential goods and services tend to recover faster. Staying patient and making smart investments will help you ride out any market crash and come out stronger in the long run. 7. Keep an eye on economic indicators. Keeping up with important financial indicators can help you make smart investment choices. Watch for changes in GDP growth, unemployment rates, and Federal Reserve policies. A slowing economy or rising job losses could signal trouble ahead. If interest rates go up, borrowing becomes more expensive, affecting businesses and stock prices. By staying informed, you can adjust your investments before a market downturn. Knowledge is power, and understanding these key factors will help you protect your wealth and make better financial decisions. 8. Consider alternative investments. If the stock market feels too risky, there are other ways to invest your money. Real estate, like rental properties, can give you steady income even during tough times. Some investors turn to cryptocurrency, hoping it will protect against economic instability, but it can be very volatile. Bonds and treasury securities are safer options because they provide more stability than stocks. By exploring different investments, you can spread your risk and find safer ways to grow your wealth. What if you want to profit from a crash? Believe it or not, market crashes create opportunities for smart investors. Here's how you can turn a downturn into a chance to build wealth. 1. Buy stocks at a discount. During a market crash, even strong companies see their stock prices drop. This can be a great chance to buy good stocks at lower prices. If you have extra cash, look for well-known companies with solid business models. Investing wisely during a downturn can lead to big gains later. 2. Short selling. Short selling means making money when a stock's price goes down. Investors borrow shares, sell them, and hope to buy them back at a lower price. But this can be very risky because prices can go up instead. Only experienced investors should try this strategy to avoid big losses. 3. Invest in bear market ETFs. There are exchange-traded funds, ETFs, designed to rise when the market falls. These can be a way to hedge against losses during a downturn. Fourth, focus on value investing. Look for stocks with strong fundamentals that are trading at a discount. Investing in solid companies with good management, low debt, and steady cash flow can lead to big gains when the market recovers. 5. Take advantage of real estate opportunities. Economic downturns often lead to lower property prices. If you're in a position to buy, consider investing in real estate while prices are down. Final thoughts. A stock market crash can feel scary, but with the right steps, you can protect your money and even find new opportunities. By spreading your investments, keeping less debt, saving some cash, and making smart choices, you can get through tough times and build long-term wealth. What do you think about the current market? Are you doing anything to prepare for a possible crash? Let us know in the comments. And if you found this video helpful, don't forget to like, share it with your friends, and subscribe to our channel for more tips on growing your money. Stay smart, stay prepared, and keep making wise financial moves.